Imagine the global economy is this vast ocean, and all these countries are tiny ships that are trying to navigate its way through the fog of trade and commerce. So why am I giving this weird example? Because in this context, the US dollar is like a lighthouse. It is the point of reference on which the trade is happening. It is a point of reference for the ships that are sailing through the ocean. For a coffee seller in Brazil who wants to sell his product to someone in Germany, or a government in Asia that wants to buy oil from the Middle East, each of these transactions are happening in US dollar. It's like an anchor, and for that reason every country wants that the currency should be stable against the US dollar. Just like the ship captain wants to have calm waters, the countries want to have calm exchange rates. Almost all the critical commodities of the world like oil and gold are priced in terms of US dollars. So every country wants to have a reserve of US dollars, so that it doesn't just run out all of a sudden. The Indian rupee is trading at record lows. It has lost nearly 6.4% of its value in just the last 12 months. But here's the massive twist. Usually when a currency crashes like this, the country is in trouble. Inflation is usually sky high, growth is stalling and people are panicking. But in India, it is opposite. GDP growth is at a robust 7.3%. Inflation is at almost 1.3%. The domestic engine is also running smoothly. So if the economy is running so nicely, why is the rupee being battered? Today we decode the perfect storm of 2026. How international trade is being weaponized. How a diplomatic row over the island of Greenland is affecting us. And how the federal banks are fighting a war over their vaults. Let's get started. To understand why we are at 92, we have to go back to August 2025. You see, prior to that, the rupee was drifting, trading marginally at around 83 to 85. It was bad, but it was manageable. But then the Trump effect started. In a move that historians call a structural break, the US administration imposed a punitive 50% tariffs on Indian exports. This wasn't just a tax, it was a blockade. The US cited India's purchase of Russian oil and high trade barriers as justification. But the result was an immediate devastation of India's export hubs. Just look at the textile industry. Cotton fabric exports dropped nearly 30% the moment these tariffs hit. Or look at Surat, the diamond industry there, which processes nearly 90% of the world's rough diamonds. It is facing an existential crisis. The US consumes half of these diamonds, so when you slap a 50% tax on them, the orders don't just slow down. They just completely vanish or move to some different country. Industry bodies estimate that more than 200,000 jobs are at risk at the jewelry sector alone. This is actually a trade shock. When you can't sell your goods to the biggest buyer, you don't earn dollars. And when you don't earn dollars, the rupee weakens. It's simple supply and demand. But tariffs are just half of the story. The other half is happening miles across in the icy waters of North Atlantic. You see, after Donald Trump has assumed the office for the second time, he has publicly spoken about acquiring the island of Greenland from Denmark. And this has led to a diplomatic standoff between US and Europe, which has naturally spooked a lot of international investors. And as a result, they have started dumping the euro as a caution. And as they have dumped the euro, the dollar has automatically gained strength. And all the other currencies are becoming a collateral damage in this global game of chess. This fear has triggered a massive exodus of foreign capital. We call it the FPI exit. In 2025 alone, foreign portfolio investors pulled out a staggering 1.66 lakh crore. That's nearly $19 billion. And it didn't just stop in the new year. In just the first 2 days of 2026, they pulled out another 7,600 crore. But why they are leaving? I mean, just think about it. If an international investor is getting a guaranteed 4% returns on an US Treasury bond, why would he risk his money in an Indian stock market that is facing 50% export tariffs? They're selling Indian IT stocks, banks and consumer firms, converting that cash into dollars and taking it out. This selling pressure is overwhelming the market. So where is the Reserve Bank of India in all this? Why aren't they raising interest rates to defend the currency? But see, here lies the paradox. RBI Governor Sanjay Malhotra and the MPC actually cut the rates in December 2025 to 5.25%. They made a strategic choice. With inflation at the rock bottom of 1.33%, the RBI have realized that keeping interest rates high was hurting the domestic economy. So they decided to prioritize growth over the currency. I mean, they are letting the rupee slide, but why? Because a weaker rupee acts as a shock absorber. It helps exporters who are bleeding from US tariffs by making their goods cheaper in other markets. But the RBI isn't just sitting on its hands. They are fundamentally changing how they save money. They are dumping US debt and holding it at a 5-year low. And they are buying gold. In just 1 week in January, they bought $1.5 billion worth of gold. We are witnessing de-dollarization in real time. India is building this war chest that is immune to geopolitical sanctions. So, what is the future? See, the future of rupee is not binary, and it all depends upon the trade deals, especially that one that is happening between India and the US. Now at Davos, President Trump has signaled that a good deal with India is coming. And if that happens, if the 50% tariffs are reduced or removed entirely, then the currency could sharply rally back. But if there is a deadlock, then the rupee could slide further. But let's understand that the exchange rate of a currency doesn't signify the overall health of an economy. We have almost $700 billion of forex reserves. We have an inflation that is the envy of the entire world. So the rupee is taking a beating so that the economy doesn't have to. It's not exactly a crisis, it's actually an adjustment. What do you think of it? Please let me know in the comments. Thank you for watching.